ALKEM Laboratories, once heavily reliant on acute therapies, is shifting to operating leverage. Q2 FY26 EBITDA margins hit a multi-quarter high of 23%. The double-engine growth story sees India growing at 12% and the US business stabilizing, with 28% YoY growth. Q2 FY2026 results were a, quote, beat on all fronts, validating the stock's recent rally. Revenue grew 17.2% year-on-year to 4,001 crore rupees. Net profit rose 11.1% to 765 crore rupees. The EBITDA margin expanded to about 23.0%, driven by stabilizing raw material costs and high-margin trade generics. Strategic triggers include the US CDMO play, pivoting from high-risk generics to stable contract manufacturing. Biosimilar entry is moving up the value chain following successful EU GMP inspections. The chronic shift is also working, with ALKEM outperforming the market in cardiac and anti-diabetic therapies in Q2. Key red flags include a regulatory snag in Malta, issuing 3 major observations for the Daman facility. Seasonal volatility means a weak monsoon could hurt domestic growth. Finally, the company faces a contested GST demand of approximately 180 crore rupees, which remains a contingent liability overhang. Comparing ALKEM to peers, Mankind Pharma trades at a, quote, chronic premium due to its portfolio and lack of US regulatory risk. Dr. Reddy's is cheaper but is a global play. ALKEM, trading at 30x PE, is a domestic heavy value alternative for exposure to Indian healthcare consumption. As of January 8, 2026, ALKEM is a large-cap and acute therapy leader. The trend is bullish continuation, driven by the strong Q2 performance. The valuation is fairly valued at a PE of 30x TTM, reflecting its strong domestic moat but lower chronic therapy exposure. For FY2026, management expects to outperform the Indian pharma market by 100 to 150 basis points. Stock action is likely to consolidate between 5,600 rupees and 6,000 rupees. For FY2027, the chronic re-rating depends on the chronic share of revenue crossing 25%, potentially re-rating ALKEM closer to 35x. The final verdict: defensive investors should, quote, ALKEM as a low beta stock, offering 15% compounding. Aggressive investors should look elsewhere, as the valuation gap has narrowed, and high beta pharma returns can be found in others. ALKEM fits as a solid core portfolio holding. If you found this stock review helpful, please like, share, and subscribe. Also, feel free to drop a comment below on the next stock you would like reviewed.